Hello guys, welcome to another video of this channel. So today we'll be talking about a business plan, right? And I will be discussing about all the elements of a business plan using this particular one that I created myself. It's more like a custom business plan. It's not like, a client project or anything like that. So it's just something that I created so that I can basically show people like my clients on what I'm able to do. Right, so a business plan. What is a business plan to begin with? So a business plan is a document that you prepare narrating the journey that your business wants to undertake, maybe in a certain period, like 5-10 years. So it's more like any other plan, like your own plan, a personal plan on what you want to do. Maybe if you want to achieve this and this and this and this, and then you simply write down how you're going to achieve all those things, but more in detail. Now, there are types of business plans out there, and I think I've made a video about that. And it all depends on what you want to do, right? If maybe you want to use that plan for maybe a management, if you're writing a plan for a management within your business, it will be different than, let's say, maybe an investor plan, because that is focusing on investors than managers. So different types for different purposes. So this is more of like a traditional business plan, right, that I usually write for my clients. So it can be used for different purposes, but mostly for investing, or maybe to go and look for funds from banks and things like that. So on this traditional business plan, what do we have, like the sections on the content, right? So as you can see, that is actually a little bit long, but just 15 pages, right? So most of my business plans, especially traditional ones, especially they're not that detailed, right? Like I don't have much of information to put in there. Like maybe my business is not that complicated, or maybe it's just a new venture that I've just created or formed. It won't have much information, right? I think 15 to 20 pages is, I think, is sufficient for that type of business plan. So as you can see, the contents, we do have the executive summary, business description, vision, mission, core values, and all this kind of things. So I'm going to be explaining each and every one of these sections. Now, first on the list, as I've said, we've got the executive summary. Now, this part is usually referred as the most important part of your business plan, is the section for the bosses to read. So this part basically is a summary of your entire business plan. So you condense everything and simply put them in this one page, often a 6 or 4 paragraph summary. Like for example, like for investors, like before they look into your whole document, they will read this part. So it has to be that good, and it has to be comprehensive and also summarize important elements within the business plan. So after reading this, your investor might decide to read the entire thing or not. So this is a very, very important part, and usually you write it at the end of everything. So you describe your business and also write like who's in charge, what the business does, the market analysis, and also the market value, and also showcase the opportunities that the investor is likely to take advantage of if they were to invest their money. So it is very important to make sure that this section is written in the best possible way. And then we have the business description. So this is where you describe your business. Like what does it do? Like what types of products and services is it producing? Where is it located? And who is the management? And things like that. So that's what a business description is all about. You describe basically your business. Then we've got the vision. Now the vision, of course, is self-explanatory. Then the mission is basically what is the reason or the purpose why your business exists in the first place. Then on the core values are the values that you share within your business. Now these will differ, and depending on the type of business in question, they won't be similar. If it's a company, maybe for example, that is in the tech sector, you will see much of innovation and things like that. So since this is actually a carpentry and joinery business, these are the core values that I think works for this particular company. For example, professionalism. Of course, you have to be professional to actually produce high quality products, integrity, customer centricity. If you're a carpentry general business, of course, it should be customer centric. That means you should put customers' needs above everything. Then we do have one of the things that a lot of possibly my clients do not understand well, that is the business model. Now, the business model is basically how your business makes money. It's more like the core mechanism on how your business makes money. For example, in this case, this is actually a carpentry and joinery business. So what is the business model? How does this business makes money? So the first way it does make money is that it makes custom products for clients, right, at a stipulated price. So what this does is that, like for example, if a person wants to make maybe a wardrobe, right, they want a wardrobe, a specific wardrobe, and they have like features that they want to have, they want it to look in a certain way. The customer comes to the business, they explains what he wants within that wardrobe, and then the business charges the client on how much it will cost to make that wardrobe. So that becomes a business model, right? A client comes, they give you custom specifications, and then the business charges money as per those specifications. And the second way the business makes money is that they sell already produced products at market prices. That is, the business produces the products the way it wants, and then the client has to buy it the way it is at a specific price that the business charges. So that is another way a business can make money, selling already made products. And then the third one, which is the last one, is that they provide services such as repairs, installations at a stipulated price. So what does this entail? So since this is a carpentry and general business, which means they do carpentry work, right? They can repair things like damaged sofas, damaged bed bases, damaged chairs, damaged tables and things like that. They can also install roofings, like those kind of trusses or whatever they call them, at a stipulated price, right? So the client comes into the business and then they tell them that they want to put a roof or they want to fix something. Then the business charges the client the amount, right? Like what it would cost to make that particular product or install those trusses. So that's another way a business makes money. This is the core mechanism on how this business makes money. Then we've got company goals, right? So these basically are the goals of your company. And usually these are categorized into two categories: the short-term goals and also the long-term goals. For the short-term goals, usually the goals that you want to achieve within 3 to 6 months. And the long-term goals from like 1 to 5 years, so even longer. So for short-term goals, what could this be? Right, this might include maybe things like what? Maybe increasing the sales, right? For example, like by 30% in the next 6 months, or maybe you wanted to improve your marketing activities, possibly maybe creating marketing materials, introducing new marketing strategies and things like that, or you want to increase production, like right, you want to make more products right here, or things like that. So these are some of the short-term goals that you can achieve within this period. Then the long-term goals, then these ones are the ones that you want to achieve over long term. Like for example, maybe you want to build maybe shops around the country, like for nationwide expansion. Maybe you want to build your brand reputation. This actually takes a long time, right, to build a reputation and become known within a particular industry and within a particular area. Then we have the products and services. So these are actually the products and services that you provide, right? What your business produces. So in this case, this particular business provides sofas, that it makes sofas. It can also repair them as well. It can make wardrobes, it makes beds, it installs ceilings, roofings, and things like that. So this is actually a major service that this business offers, and it restores like chairs, old chairs, like the upholstery, kind of those cushions of damaged like products. So that's what it does. And then we have one of the most important things that investors usually want to see, and that is the market analysis. So in this part, you are supposed to highlight the opportunity, right, for the business, like how much market is there or demand is there for a particular product. So you can highlight this by showing the sales figures for a particular product over a period of time within maybe a specific area where your business is located. And you can get that data from statistical agencies, right? There are different types of statistical agencies or government statistical agencies that you can maybe browse and then download some of the reports that they've released on that particular website. So this is basically sometimes how I gather that kind of data. Or if you don't have much of the data, you can use other means to kind of showcase or highlight the market opportunity. This again will vary on the type of products. So that basically the type of products that are consumed by people of different demographics, right? Like children, mothers, and people that have all sorts of like different incomes, right? So you should be able to highlight that. And even the population can be an analysis, but again, on the analysis, if you have the data, I'll say try to be as specific as possible as to the real market value of your specific products and services. Then you can also include maybe customer segmentation, but though this is not really needed, we don't have to include it like this, but if you just want, you can do that. And by customer segmentation, I mean you can simply group your customers into different subgroups, like how many of your customers are maybe government agencies or government institutions, or how many of your customers are individuals, or how many of your customers are business organization or things like that. But again, it is not really needed in a plan, but you can just include it. Then we have the marketing and sales strategy, like how are you going to sell your products, basically. Like what strategy are you going to use? What are you going to be maybe displaying flyers in public, or maybe you want to be advertising on social media platforms like Facebook, WhatsApp, and so on, or maybe you'll be talking to people like using word of mouth. So these are types of strategies in which, of course, you can market your products and services and things like that. Then we have the location analysis. So in this part, right, you basically analyze the location where your business is at, right? But is it near suppliers? Is it near customers? So these things are very important. Like how accessible is your business to the target market? So it is very important to include as many details as you can on this particular section. And then we have the management and operations. So these are the key members of the organization, like the top guys, right? Like who is who within the organization? Who is your CEO? Who is your director? Who is your manager? And things like that. And here you can actually include an organogram, right? Which basically displays like the chain of command, right? From the big boss, which is the CEO, to managers, like senior managers, and to middle management. So it depends basically on the number of employees and members within the organization. And you can also include the profile of each and every member, like the top guys, like the title that they hold within the organization, their qualifications and experiences as well, and also what are the other type of like employment schemes that we have within the organization. You can include that. And there's also the competition analysis, right? So here we highlight the main competitors of your business. Like for example, this particular one is actually a carpenter and joinery business. So what are its competitors? Like the main ones, we've got big brands that deal with furniture, which is of course one of them is called Build It right here. And we've got bread loaves and also like small furniture shops. And then you highlight what the business is all about its products and services, the prices and things like that. So you're kind of comparing it to yours that is particular right here. So this is actually very important to basically highlight like the chances that your business has, to compete with these guys. And then we've got the competitive advantage, like what gives you the edge, or what gives your business the edge to beat other competitors, right? Do you charge maybe lower prices for your products and services, or do you offer like highly customized services and things like that? So showcase it here, like why do you think you're better than the other guys, right? And then we've got the SWOT analysis. So this is where we analyze the strength, the weaknesses, the opportunities, and the threats that the businesses face. So on the strengths, here we highlight like what are you actually good at? What do you do better as opposed to your competitors? Then we've got the weaknesses, like what makes you vulnerable, and like where are your shortfalls in short. And also I've got the opportunities, like what opportunities are available that your business can take a major advantage of. So this is very important. Also the threats that are basically threatening your business or to put you out of business. So make sure that you highlight each and every one of these points. And the SWOT basically acts as a diagnosis, some sort of, you're able to view your business like holistically. Like for example, with the strength and the weaknesses, this is actually what you call the internal factors that you have, like the business has. And if you highlight these, right, you're able to know like what your strengths are and your weaknesses and what you need to improve within your weaknesses. And of course, these are external factors. These are you cannot control. These ones, then the top ones, you do have control over. Then we have the big one, the financial projections. So a lot of people often find it difficult basically to do projections. They can write other things within the business plan itself, but when it comes to projections, that's where the problem is. So today I'm going to be explaining basically like in simple terms what each and every one of these elements basically means, right? Probably not in detail, but I'll try my best. Now, on the financial projections, these are basically like guesses, or I'll say calculated guesses that you think your business maybe might achieve financially. Like for example, let's say on the sales projections, like how many sales or how much sales do you think your business will make maybe within the year 2024, right? So here I highlight like 31 December. If you can see here, like from 31 December, this is the month end of the year end, actually, not month end, year end. From maybe January to 31 December, how much do you think your business will sell? Of even all these things bundled up, how much of it will you make? And you can calculate this by analyzing other your competitors, like that are within your range or maybe your size. How much furniture do they sell within a particular time? Or maybe your own experience if the business has already been operating this time, like how much have you made maybe from monthly, that, and from those figures you can maybe kind of guess where the final amount will be going. Year 2025, maybe you can put like some sort of increase, maybe 5% increase and things like that. That's how you come up with projections. So these are well calculated projections or guesses, right? Not something that is out of the ordinary. Guess like, if I'm making this much a month, probably maybe within December, the year end, I would have made this much. And maybe next year, maybe if I've introduced this and this and this, maybe I've invested more in marketing, I might have maybe a certain increase, the percentage increase, maybe I'll sell maybe 10% more than I did last year. So that's how you come up with these projections. Then you can basically display them graphically like this. Very importantly, highlighting the growth rate. And then we have the profit and loss projections. Now, these are the real projections that a lot of people often have a difficulty with. So the profit and loss projections, as I've said, it's more like guesswork again, like how much profit or loss are you going to make maybe within year 2024, year 2025, or year 2026. whatever the case might be. So as you can see, these are different years and these are the elements, right? And as I've said, I'm going to explain each and every one of them. So on the top right here, we've got the revenue or the gross revenue. So this is actually the revenue that you get from all your sales and things like that, maybe services, products, or whatever. Then we've got the cost of sales. These are the costs that are directly linked with the products. Cost of sales might include things like, for example, if you import something, the cost of sale for importing that thing would be maybe a shipping fee, a tariff, or a duty, whatever the case might be. So anytime when you import something, you have to pay a certain amount of money. So that cost is basically related to that purchase or that sale, whatever the case might be. And so these are what I call cost of sales. Then if you remove the cost of sales from the revenue, we do have the gross profit. Right? So this is the profit that you get after removing these cost of sales, but you haven't removed other costs as well, like the operating expenses. You haven't removed those, the taxes and things like that. From there, you have the gross margin, which of course I'm not going to explain or anything like that. And from there, you have the gross profit margin, right? Then you've got the operating expenses, like the rent, transport, things like that. We've got the EBITDA, which means earnings before income tax and depreciation and amortization. Then you've got the depreciation and amortization, like how depreciated your assets are or products are and things like that. That's what you calculate here. We've got the interest, if in case you borrowed a loan, and then we've got the taxes here. Then finally you have the net income, which of course the money that we have after taking all the costs, taking all the taxes, taking out all the expenses, the depreciation and amortization values and things like that. So that is actually the money that you can actually spend. Then we have the cash flow projections. So these are basically projections on how your business is going to use its cash. So in this part, we've got the receipts, right? What you will be receiving. Right, for the balance and where it starts, maybe start with 0. Then the sales that you get is how much? 9,800. Then the payments is what you're going to be paying. Might pay for material, might pay for maybe, I don't know, wages and salaries, electricity rates and water. So as you can see, there are no values here. This is because I just made this thing for marketing purposes. But again, there should be values right here, but I just left them for whatever reason. And then we've got these electricity rates and water, rent, and all these kind of payments that you're supposed to pay. So the receipts is how you receive your money, like from the sales, right? Then the payments, what you're supposed to pay. Then what is left there is the balance, right? Which is carried out to the next year right here. Then the whole things start off again. We've got the balance carried downward right here and carried to the next year. So this basically highlights how your business will be spending money and how money will be used within your business. So that's what the cash flow projections are for. So when we make these, of course, we're more detailed than this. So like we produce them for yearly, where we highlight like each and every month how we're going to be using this cash. So as I've said, like this is actually for marketing purposes. So that's why most of these things do not make sense at all, and there's some values that I didn't include there. And another projections that I usually include in business plan will be the balance sheet. But for this particular project, I didn't include it because this is actually a new business, so it doesn't have much of an assets or loans or things like that. So there isn't any reason for me to create a balance sheet for this particular business plan. Cash flow and income and loss will do for this particular startup. And last, of course, you have to conclude your business plan, like kind of summarize everything that you have talked about throughout the entire document. Then, of course, you have to include the references, like to highlight that you did research. If you took some sort of statistics from certain websites or things like that, you have to include it under the references. Very, very important. Then, of course, you have to list the tables and figures, right? Each and every statement or table that you've highlighted on the business plan, you're supposed to list it here. So this is very important, especially for people maybe that need to look at projections and they don't want to go through your entire document, so that they can quickly find them. Then of course you can include your cover page where you can include your contact details and things like that. As you can see, these are kind of like phony. Like for example, like my website is this one. There's no website with this kind of a name or URL. Then my number is 123 up to 10. So you have to include your contacts at the end of your business plan so that they can be able to contact you, or whoever is reading your business plan, they should be able to reach out to you. So guys, that is all about this video. And again, thank you for watching this video. And until then, see you on the next one.